Hey everybody, my name is Allison Ostrander and I am the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to talk about Microsoft. Now, Microsoft is a interesting setup to me, and so I wanted to highlight it here today. The reason why I think Microsoft looks interesting is because we had a recent cluster print of true lows. And for those of you who don't know what this indicator is, it's basically to try and help determine a potential discount price for the symbol that you're looking at. It's not supposed to print on every pullback that occurs that happens, right? There are other indicators that can give that to you. Instead, it's supposed to try and help identify a bargain deal for either a shorter term or a bigger picture move in a symbol. So here, for example, we had a true low signal print. Usually when it prints, when the Bollinger Bands flare open, I wait for them to flatten out before the opportunity to jump in. Had you had jumped in here when those Bollinger Bands started to flatten out, you could have participated in this run to the upside, or of course, for a bigger picture move. Here we had another drop down into support levels. You had some true lows printing while the Bollinger Bands remained flat. So once again, this was a good area for a discount buy in Microsoft. And then, of course, you had a shorter term trend to the upside, as well as, once again, a bigger picture point of view. And then back here, you had a true low entry that gave you, once again, a discount buy for the shorter term run up. Now, obviously, on the bigger picture point of view, we're kind of right back in that range of where we were trading at when it first printed. And as you can see on this recent pullback, we had another set of true lows print. And so to me, this looks like it's attempting to set up for a good discount buy for a bigger swing move to the upside. Now, a few things to be mindful of course. One, we're obviously not in a stacked up formation yet. That's not uncommon when you first get a true low to print. Sometimes the true low is the very first thing to print before all the other bullish signals on your chart catch up. But what I'm a little cautious about with this entry as of right now is the Bollinger Bands are still relatively flat, right? And so I do want to be mindful of that. If it pulls back down towards the 100 period simple and maintains it as support, I think that'd be an excellent spot to jump in and then try and play for a bigger move higher. We have a great squeeze setting up. Momentum's in the process of resetting, so that if that can start to cross above the zero line, that's going to add to that bullish trend sentiment. Still more consolidating signal in the compound breakout tool makes sense with what we're seeing here. Once again, if we can get more of a bullish signal in the compound breakout tool, that too would help us out with this trade idea. And then if we do manage to break higher, we do have a little bit of daily resistance above us at 335. So that might make for a first good target to the upside. But if we can break above that, change it into support, at that point, the Bollinger Bands will likely be opening to the upside, if not flaring open, and allow us to maybe get that trend move higher. When we take a look at the weekly chart for Microsoft, we can see here as soon as it pops up. So we can see here on the weekly chart for Microsoft, it was actually at weekly bullish exhaustion. And so that has been in the process of resetting. And as that's reset, we can see here that Microsoft has had a little bit of a pullback on the weekly chart, but it's still actually maintaining its overall bullish sentiment. We're actually starting a potential low compression squeeze here on the weekly chart. Still have a pullback signal. So once again, want to be mindful that we might have to sit through chop. But as long as we can maintain support and this resets while keeping the bullish sentiment, it does look like a good pullback buy on the weekly chart for our next leg higher. So here are a few things I would consider for this trade idea. The first thing is if I want to jump in now, which given the potential bearish divergent bar today, if the bearish divergent bar prints on the daily chart, I'd probably wait at least another day, see if it doesn't follow through with a lower low and give me that entry off the 100, right? As long as the 100 maintains support, that would be my trigger to try and buy in at. But I'd want to go out and give myself time. So I'd want to go out to at least October, if not maybe even the November monthly expiration. That would technically put me after the earnings announcement. So that in of itself would help kind of protect against theta on top of course, the time that's on the trade. And then I'd look to try and jump into a long call to play to the upside. Now, the prior highs that we had recently are right around the 360, 365 range. So what you could look to do, given how much time you have, is to go out around that level and jump into a long call with the idea that we'll work our way up into that range, if not higher. And of course, if that happens sooner than later, right, then this should definitely increase in value. Or you might go a little bit in the money. That way, in the money, not in the money, but below those price levels there. That way, if we go up and tag them, the strike will then in turn be in the money and have intrinsic value, allow for a profit. So something like the 350 strike is about a 790 cost basis for November. The 360 strike is a 525 cost basis, and look to play that to the upside. Plenty of time for the run. If you want it to go with the October monthly expiration, bring it in some, then it's certainly going to help reduce the price, right? The 350 strike is only 363. So a lot smaller capital risk. If you went out to the 360 level, that's a 205 cost basis. So for those of you with smaller accounts who still want to play like the long call off this trade idea, it still gives you plenty of time to try and potentially have to sit through some chop and allow the signal to work out, as well as keeping your cost basis lower. Another way to keep it lower would be to do something like a vertical spread. So if you prefer the November monthly expiration, but this is outside your risk tolerance, you could look at doing a vertical spread, right? The 350, 360 vertical debit spread is a 260 cost basis, 740 profit potential. So excellent risk versus reward, right? In line with those prior highs and going back up into them. And at the same time, very small in the cost basis, similar to what a long would call out in the October month. So you have a lot more time that you're giving yourself on the trade. You could also consider a debit broken wing butterfly. That out in November using the same strikes. And then for the credit spread side of the butterfly, doing the 360, 365 is a $1.65 cost basis, 835 max profit potential. And then if it were to really shoot up and get going, let's say it's at 375 by the November monthly expiration and your entire debit broken wing butterflies in the money. Well, the benefit of this strategy versus a standard is that if it goes completely in the money, it would still allow for a profit potential. In this case, let's say we get filled at 160, it would still allow for a profit potential of 340. Once again, still an excellent risk versus reward there, over 100% return on your risk if you wanted to take it. So you can play out different strategies to consider whether it's a vertical spread or a long call, but I would go out to the October, if not the November monthly expiration, to give yourself some time to potentially sit through some further chop, given how the weekly chart is still in the process of resetting. And then the second thing I want to note is if we really start to break below the 100 period simple, right? Not necessarily a one-off bar, but if it looks like it's starting to move lower, I would then cut the trade idea there. I really want to see this maintain holding the 100 with the discount price and how that was printing when testing that level. And if it doesn't, then I rather protect capital, and you can always reevaluate it later for a new entry. But if it can maintain holding the 100, given how the technicals look, I think this could make a great pullback and then bounce higher kind of trade. Thank you so much for joining me today. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.